We are live. Welcome to the Special Finance Committee meeting at 4 o'clock on October 24th. I'd like to call the meeting to order, and please stand for the Pledge of Allegiance. Ready, begin. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you, everybody. Let's see, a roll call. Both directors are here. Approval of the agenda. Is there any adjustments to the agenda? No? Do I hear a motion to approve?
I'll make the motion to approve.
I'll second it. All in favor?
Aye.
Aye. Agenda is passed. Public comment. Do we have anybody online? No public. No public here or online. Okay. Item 3, then we'll move to approval of minutes. Did you have any changes to the minutes?
I did not. They look good to me.
If not, do we have a motion?
I'll make the motion to move the minutes.
I'll second it. All in favor?
Aye.
Aye. Approval of the minutes. That brings us to item 4, review of audit report. I guess Mr. Bartz will pass it on to...
And I'm going to pass this on to Chris Brown. Our auditor is going to be making this presentation to the board, or to the committee.
Thank you very much. Thank you very much. Once again, my name is Christopher Brown. I was with CJ Brown and Company, CPAs, and we'll go ahead and go over the audit process and the results of the 2023 audit. First thing I'd like to kind of go over just the process itself, just so we're all familiar with what we're actually doing as part of the audit. We're reviewing the accounting procedures, selecting and testing representative samples of transactions within the various accounting cycles. So within your accounting system, there are various cycles. Amongst them are your revenue cycle, basically how you're charging and how you're collecting funds. Purchasing and disbursements is another cycle. Payroll cycle, and your bank reconciliation cycle. So within those various areas, we're essentially selecting certain transactions, a representative sample of those transactions, going through the process, verifying that the information is correct, and within your own internal control policies and procedures. From that, we determine the risk level within the audit itself. We're looking at the various areas within the audit, and we're determining which areas that we might be able to rely on your controls and which areas we might find we want to add a little bit extra to. So that's kind of the process as far as our internal control process there. Just to let you know that our audit was done both on-site and off-site. So we came out here and we did significant testing, and we basically followed up off-site as well. Okay. As far as the reports are concerned, there's 2 reports that come out of the audit, or I should say 2 documents. One being the financial statement and one being the management report itself. The management report is our communication to you, board of directors. You're our boss. It's to you we answer to. It's in a separate document, as I noted. What's in it is basically going to disclose any journal entries that were made during the audit, the nature of them, and certain disclosures with regard to if we came across anything that was unusual, and I'm happy to say that we did not come across anything unusual. Within the financial statements themselves, let me get this out, there's a few new things, I should say. One of them being GASB 96, which has to do with subscription-based information technology arrangements, and I'm happy to say there was no effect on your financial statements itself, but you implemented it, okay? And you will note that within the financial statement itself. Other new items within the financials, we see, the new loan with regard to the Civic Center facility. We also see the investment in the California Cooperative Liquid Asset Security System, new item there. From that, let's go ahead and go into the financial statements themselves, and I'll make some comments as we start going through that, okay? Okay. I will- Yes, yes. Okay, with regard to the financials themselves, the format is very similar to the prior year. The effect of those, the GASBs that were implemented had no, like I said, no material effect on your financials. The first section, of course, is what we call the letter of transmittal, and it begins on page 1. I won't go through it necessarily. I'm just going to bring it to your attention. So the pages 1 through 7, excuse me, 1 through 11. Yes. 1 through 11 is essentially the district's explanation of itself, what projects are in place, how they're coming along, what you see for the future policies and procedures and such. So that makes up essentially pages 1 through 12. I'm sorry, 11.
Yeah, that's page, his one starts on our big page 24.
Okay.
Yeah, 24 through 38.
38. Okay. I don't have that copy. Should I get that copy?
Actually, through 34 is where he,
All right, thank you very much. The next sections within the financials are items that are required as part of the ACFR, the award program that you're in, with regard to the certificates of achievement, district boundaries, and essentially the list of the directors and management as well. As we get into the report itself, we are providing you with a clean opinion or a unmodified opinion, and that is on page 42 of the document. And it basically says, in our opinion, and I should note, this is the second paragraph on that page. In our opinion, the financial statements referred to above present fairly in all material respects the respective financial position of the governmental activities and business type activities and each major fund of the district as of June 30th, 2023. So congratulations on a clean opinion. Moving through the document, and this is on page 45. It's a series of pages, what's called management's discussion and analysis. And essentially what it does is it takes the information from the financial statements and it aggregates it and it basically provides an explanation to the readers. And as we can see on page 46 and page 47, we have the tables that show the activities of the district for both years 2022 and 2023 for both governmental activities and for the business activities themselves. And of course, the totals.
So I have a question here.
Yes.
On page 45, big 45.
Yes.
So you didn't, the third bullet point there under financial highlights, the district's total expenses increased by 37.86%. You didn't find that interesting?
It can be. It can be. It depends on what's driving it itself. Whether it be normal operations, whether it be the effect of pension liabilities swinging one way or the other. It just kind of depends. What we basically do in the document is we will say it did this, it went up or it went down. We won't qualify the reason necessarily of this is, unusual or this is great.
You don't have to qualify whether it's good or bad.
Correct.
But you do break down in the document
Absolutely.
how it went up 30.
And we're
percent.
going over that
Okay.
next.
That's all I wanted to.
Yes. So on page 47, basically there is a series of paragraphs that go over that very thing. And at the bottom of page, let me start at the top. Let me find the right spot here. So basically what it's saying at the very top paragraph is that for the year ended 2023, the assets and deferred amounts, less the liability, less the other deferred amounts, were $55,133,311. So that's basically your net position at the end of the year. Now let's go back down to the bottom of the page as I started. We can see that it says compared to the prior year, the net position of the district increased $1,612,000 and change to that $55,133,000 as a result of ongoing operations. In the paragraph below, it basically starts out discussing the revenues, and then we'll get into the expenses themselves. So it shows that total revenues increased I'm going to round these numbers here. Revenues increased $1.56 million to $12,720,000. District's general revenues, and general revenues are things such as interest, other charges, not necessarily your daily activity. General revenues increased $1,700,000, primarily due to increases of $1.5 million in interest earnings due to the district's portfolio of investments in the current year as compared to the prior year. $167,000 in property taxes. So we're seeing that across the board. Increases in assessments due to sales and such. $34,000 in other income. Program revenues are essentially what you do here, water sales and such. Okay. Program revenues decreased by $138,000 due primarily to a decrease of $328,000 in water consumption sales due to a decrease in demand. Sourcing as a result of having a wetter year, that would make sense. Let's see, let's go to $117,000 in other charges for services due to reinstituting credit card fees, which were waived during the pandemic. We're seeing that pretty much across the board as well. $94,000 in general fund charges for services sourcing from a county refund of property taxes. I believe we are going to get to your question. Pardon me, I'm pulling apart this agenda here.
So the general revenues, and it says 1.5 million in interest. The general revenues fall into the all. We have the enterprise and then we have government. We have two different parts to it, and that falls into what, governmental?
The general revenues are going to be both
governmental
and for the enterprise fund.
Okay.
The general revenues are going to include, as I noted, things like interest. It's also going to be property taxes as well, things like that.
We call it non-operating revenue on our financials.
Okay, so I'm confused on that because we're unable to use enterprise funds in the general, in the governmental. So investments of enterprise funds cannot be lumped into a general. It has to be separated, correct?
If you look at the top part of the page,
Am I confused?
well, I think if you look at the top part of the page, the left column, what we call non-operating revenues, he's calling general revenues, okay?
Okay, so
And
that's-
then- and you
that's
can
the
see there's-
government.
Now, there's two columns. There's one column for government activities, and there's one column for business activities, which is the water.
Okay.
And in,
And then the total budget is.
Okay, so you have separated the interest earnings into, that's what I
Yes.
wanted
it
to
is.
clarify.
Yes.
And that's under general revenues, interest earnings. So the 2023, the governmental funds received 428,000 in interest, and enterprise or business received 736,000
Correct.
in that, out of that 1.65 something million. Okay,
Yes.
Yes.
that's what I wanted to.
yes.
I hadn't put it together, because I saw your lump sum down here. I said, we got to separate that somewhere, and I
That was
didn't
a
figure
good
it out.
question. though,
Yeah,
because
that-
I was confused too when he
Yeah.
mentioned it.
Okay,
Yes,
Got
these are aggregated numbers, and of course, we're putting the government, we're seeing in one column, the business in another, and then the total. But to go back to part of the first part of your question, yes. Amounts have been separated into their constituent part, whether they're governmental, whether they're enterprise, and correct. Enterprise funds should not be allocated to the governmental activities.
right.
There's an
that's-
exception, but.
We can't,
yes.
so that's why
Yeah.
I couldn't see where
Yeah.
the interest income from
Yeah.
all of our list of money-bearing accounts, interest-bearing accounts were separated, but now I see it right there. Okay, thank you.
So on page 48, is kind of getting back to your expense, and keep in mind, this is kind of an aggregated view. We can dig through some of the numbers if we wish. But it says total expenses increased by that 37.86%, or $3,050,502 to that $11,107,629, due primarily to increases of $1,971,000 and change in water, general and administrative, due to the pension accrual changes.
Okay,
We're
what does
seeing
that
as-
mean?
Well, every year there's an actuarial study done on the pension plan itself.
Right.
And from that, what it provides is it looks back, it's essentially a year old, okay? It's kind of a hard, long conversation, but essentially it's a year old. And what
It's
it
the
does-
funding of CalPERS.
Yes,
Okay,
Yes.
so CalPERS needed more money, and that's, so 1.9 million is a one-time charge, basically.
I wouldn't look at it that way. The
No?
way I would look at it is basically what the actuary is doing is they're calculating what will be required to fund the pension looking out a number of years. So what they do is they adjust the liability each year based on the numbers that they're starting with, rolling it forward. They're taking a look at monies that are in the investment each year, the effect of the stock market, essentially in the bond market, what its effect is, amounts that you've contributed. They take all that together with certain actuarial formulas where they're looking at how many individuals you have in your plan, life expectancy. It's kind of like an insurance policy,
Yeah,
actuarial.
I get that.
So they come up and they determine what the liability is. So when you adjust, when the district adjusts the liability and the deferred inflows and outflows as well, the expense is where it is offset. So if they adjust the liability X amount of dollars, the offset is the expense. So in a year where there are fantastic, we'll just make this real simple and just say there's one factor that's truly affecting it. In a year where the stock market does really well, essentially you would have a negative expense hitting your books because there's more money for CalPERS to pay out on your plan beneficiaries.
Right.
Conversely, bad year, it's just the other way. It's just the opposite of that. And you
Okay,
have-
so the 1.9 is making up for the deficit that they had in their investments.
Correct.
And so, but it's not a one-time deal because CalPERS retirement costs have risen?
Sounds like, because.
Or don't they readjust every year? And
Every
that's why
single
I
year.
suggested it's a one-year
It's a
time.
rolling number.
So the 1.9 million is a one-year event,
Correct.
and it's not continuous because next year could be the opposite.
Could be, yeah.
What could be that or the opposite. But currently, a lot of our deficit is that 1.9 million.
For example, was it last year, David, last year they were super funded, or not super funded, but where they had an extraordinary year, and so the net result to us was, we didn't have any, not last year, but,
Correct.
Yeah.
2 years prior, yes.
so it does, every year it's different, and it could be that, next year the investments will be better.
Well, that's what I wanted to know,
Yeah.
because of the big deficit, a lot of it is that.
It's a non-cash adjustment to your liability that, you're correct, you're right on. Next
Okay.
year, it might be just the opposite. So
Okay.
in a perfect world, I'm going to throw my personal feelings on, in a perfect world, these would be smoothed out. It wouldn't be these dramatic shifts, but there's no provision for doing that. But it seems to me that that would be a wise thing to do, you can't, but if there was some sort of smoothing mechanism to even these things out from year to year, because yes, there have been wild swings. Last year, it was up. There were assets on.
That's
people's
why I'm
books.
looking at a
Yeah.
37% increase in spending.
Yeah.
How much of that is due to that 1.9 million?
Looks like 2/3 of it, right?
Yeah, approximately.
Okay, well, so see, that's why I asked about that.
No,
I was
that's-
trying to figure it out here, but it's mostly, or 2/3 of it is basically a one-time expense for this year, at least
Correct.
theoretically.
Correct.
Yeah, theoretically, yeah. Next year should be minimal because the interest rates they projected earnings were close to their projections, but it was slightly under. So it's going to be a small adjustment next year, not as big as this one.
Let's hope they got rid of their 1% bonds this year.
And I can't speak to that because I really don't know. I don't know
Yeah,
what's going to
no, that's, I was just
Yeah.
trying to see the 37% increase, a lot of it is due to the fact that CalPERS got screwed.
I'm sure they have a great investment policy.
Oh, yeah. Okay, all right, thank you.
Okay, let's see here. Continuing along as far as adjustments to the expense in regard to the increases, it notes 286,000 in parks and recreation expense due to increases of labor and capital outlay, 253,000 in water transmission and distribution due to increases in repair and maintenance expenses, 134,000 in solid waste expense due to increases in labor, and approximately 124,000 in water interest expense sourcing from additions to the long-term debt. So more debt, there's
Yeah.
going to be more.
May I ask a question of what is anticipated in the increase in the solid waste expense for labor, mostly labor, I assume? Is that going to continue? Yes, okay.
Based on the activity that the district is going to be involved in where solid waste is concerned, as you're aware.
Yeah, that's,
that we will have more expenditures in the coming years. But
That's what I
the
thought.
the revenue will be going up too, so.
The revenue is up, but the initial expenses are up, so I just
Yeah.
wanted to clarify that on the record. Thank you.
Okay. So those are basically the top level effects on the revenues and expenses. Continuing in this section here, we have, the next section is changes in fund balance for the governmental funds themselves. And what it does is it breaks out the various funds, general, parks and rec, street lighting, and solid waste, and shows the change in fund balance from during the year. And as we can see, general, an increase of 286, parks and recreation, 533,000, street lighting, pretty small, $848, and solid waste saw a decrease of 2,221. So,
Solid waste.
The next section that we see is the capital asset administration. Basically reflects amounts invested in your capital assets, them being capitalized, and of course the accumulated depreciation, the yearly depreciation expense and the accumulated depreciation. And as we can see, with regard to total district, I'm not sure it would make much difference to split it out, but total district, we're up a bit. We're at 42,654,761. And we can see more detail on that a little bit later. Okay. So that is essentially the management's discussion and analysis. We can see on page 51, or what we call the government-wide financials, and what that means is they're combined. It's got the governmental activities, there's a column there, and there's a column for business type activities in the total. And what this is it's presented on the full accrual basis of accounting. So revenues are recognized when they're earned. You may not have collected on them, but they're recognized. Amounts collected, receivables, full accrual. There again, if you recognize revenue but you haven't collected it, it would be part of your receivables. There are other examples as well. There are no comparative items here, so I won't go through each item here. Nothing really jumps out as being really unusual to me. Moving on to page 52. This is the statement of activities. This is like your profit and loss statement. This format here is a standardized format. It does differ from your standard business type format that we're all used to. This is done under the modified accrual basis. And as you can see, it shows the governmental activities, the expenses, charges for services, total governmental activities, and it also shows the business type activities for water, showing the expenses and the charges for services coming across, and then down we see the area for the general revenues where we see things like the property taxes, interest, earnings and expense, and the other non-operating revenues. Change in net position. Change in net position is another way of saying like net profit, net loss. So it means essentially the same thing. And we can see for governmental activities, it was 747,515. For business type activities, it was 865,185 for a total of 1,612,700. And then we're going to see that number I quoted earlier. Net position at the end of the year, this is at the far right column, at the bottom, the 55,133,311. So that is your statement of activities. As we move into, I'm going to 53 and 54. Let me explain what these are. These represent your assets and revenues for the governmental funds, which are presented on the fund basis. As I mentioned, this is modified accrual. What we see here are the in that table on both pages are actually the numbers that are recorded on the fund basis, which does not take into account things like debt and capital assets and depreciation. Those amounts are reconciled in that area down at the bottom of the page. So where you'll see reconciliation, that's a process whereby we take the change in the fund balance of that $9,079,000 and change, and we reconcile it. We say, okay, we need to add in what we've invested in capital assets, what our leases, receivable amounts are, debt, and such. And it reconciles down to net position of governmental activities. of the 13 million, I'm looking at the very bottom of the page, 13,093,292, which does agree to the statement of activities, page 52. So that all ties together. Page 54, similar. However, it's done for your revenues and expenses. There again, modified accrual, certain expenses are not recorded, certain revenues are not recorded, but they're reconciled in this section at the bottom, taking your change in fund balance and reconciling it to your change in position in governmental activities, which does appear on page 52. On page 55, this is a little bit more traditional here. These are the statement of net position for the enterprise fund. So this is a little bit more traditional, what most are familiar with, showing your assets, liabilities in the full accrual basis. And we can see that total current assets for the enterprise fund, 14,223,000. Non-current assets consisting of your investments. Capital assets, total assets equaled 59,642,000 and change. Deferred outflows of resources, there again, that relates to amounts that will be applied mostly to the pension obligation next year, I should say. Then we move into our liabilities section, typical accounts payable and such, and we can see the total current liabilities of the 2.4 million. Non-current liabilities, these are amounts that are expected to be paid in 1 year or more. They are separated out as long-term, and we have 15,702,000 and change, total liabilities of the 18,166,000. Deferred inflows of resources, this is where I was trying to circle around from our previous conversation talking about the pension liability and all that. You see it says 0. There could be times when there's actually going to be an amount there that will be applied to that pension liability. Either you increase it or decrease it. It just so happens this year with the way that the actuarial was calculated, you don't have an amount in the current year. The very bottom section is net position. That represents essentially your net worth. You might have heard me say it that way in the past. It's your assets minus your liabilities, what's left over. It doesn't represent cash, it's your net worth, okay? And in this case, you can see that the investment in capital assets, which will be your investment, cash outlay, less depreciation, and less any loans that might be outstanding on building those assets. It's adjusted every year for depreciation expense and, of course, normal amortization of loan. Unrestricted is basically what's left over. It's net worth that is not restricted in any way and can be utilized for operations of the district enterprise fund itself. Okay. Page 56, it's the other side. Operating revenues, operating expenses, the non-operating revenues and expenses, and change in net position. In this particular case, we can see operating revenues of the 8.5 million, operating expenses of, and this is right in the middle of the page, 7.8 million, depreciation expense of approximately 1.89 million. Your operating loss, and what this is doing is this is taking your operating revenues minus your operating loss for the enterprise fund, and we can see that the loss of 1.152 million, most of that is being driven by your depreciation expense here. Okay. Non-operating revenues and expenses, of course, there again, things that don't relate to your normal operations. It's going to be interest and property taxes and such. Approximately the net amount of 846,000. And we take into account any transfers between the funds. Bottom line is change in net position for the enterprise fund of 865,185. The next section, or next page, 57, and I won't go into detail on everything. I know I've kind of gone into every single page, but what you have here on page 57 and page 58 are the statements of cash flow. Now, governmental funds do not report cash flow. It's the very nature of the modified accrual methodology. They don't lend themselves to cash flow statements. It is required, though, that the enterprise funds show a cash flow statement for each enterprise fund. And essentially what it does is on page 58, and I won't go into detail on this. This is like a full day of accounting homework here. But basically takes your operating income and backs into your change of cash from operating activities. It basically says, here's your operating gain or loss. You had payables, you had receivables, you had blank, 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 blank. Your change in cash from operating activities should be this number. And in this case, net cash provided by operating activities was, this is down at the bottom of the page, $1.8 million. Now, if we flip that page back over to page 57, this is a different way of looking at cash flows, and both of these are required to be in your financial statement. Both these methodologies are. This version of the cash flow statement takes real dollars. It doesn't take a number and back it out or add it in. It basically takes the actual number per category and adds it to the total or subtracts it from the total. But what we can see is in that first grouping here, cash provided by operating activities ties out to that number I gave you just a moment ago. It's that 1.8 million. That is the cash provided by operating activities. It's kind of a proof that this is working when these two numbers match. They have to match, and they do. And then the rest of the sections break your cash flows out by various type of activities. Financing activities, capital-related activities, buying, selling capital, debt, acquiring debt or paying off debt. It also takes that into account. Investing activities, purchasing and selling investments that are on the cash basis. Not all investments are considered cash. Some are considered to be investments. They're not liquid, let's put it that way. If they are considered to be true investments with a maturity greater than 30 days, essentially is what it comes down to. They will be in investments. They won't be part of this here. It's only items that are liquid, readily available to be converted to cash. And what we can see, cash at end of year is $9,295,000 and change. It is broken out in this reconciliation of cash and cash equivalents in that little table below it, and it's showing what is cash and cash equivalents and which amounts are restricted for things like debt payment and such. If it's restricted, it needs to be used for particular use.
Are our like emergency funds and stuff, is that under restricted?
Our reserves,
Yeah,
I don't believe those are considered restricted.
okay.
No.
So it's just basically
For
those
audit-
tied
for auditing purposes,
tied to loans and debt,
Yes.
basically. Okay.
The requirement is that it be stipulated by an outside party. For it to be truly restricted within your financial statements, it needs to be by the lender or somebody donating an asset. It needs to be used for that.
Okay, not funds designated by the board.
Designated funds can be called designated and be noted so typically in a note within the financial statements, but it'll
But
be
they're
shown.
not restricted.
Not
Okay.
restricted, correct. Okay. So from page 59, and let me kind of scoot to the last page here, and forgive me for digging through this way. Page 59 through 89 are the notes to the financial statements. And what they are is support for the numbers that have appeared in the tables that we've just gone over. For example, it will discuss your policies. There will be a description of what those policies are. It will describe, within the notes, it'll describe what new professional pronouncements have been adopted by the district, what pronouncements are out there that will be implemented in the future, those are at the very end of the notes section. But it'll go through certain sections in the, like the statement of net position, your cash, your receivables, your loans, leases and such, and it'll provide typically a table that spells out what the roll forward is, if there's an amount coming from the prior year, taking into account any new items, less any amounts paid out, and the ending balance, so the reader can readily identify what transactions happened, or what the activity was. I shouldn't say transactions because those are item specific, but what activity gave rise to the number that appears at the on the financial statements.
Yeah, those are the references earlier that you referenced, these
Correct.
divisions, these.
Correct. On pages 92 through 95, yes. 92 or through 95 are going to be budget to actual. These are required statements. They need to be in your financial statement. And again, they basically, it shows your final budgeted amounts, your actual amounts, and what the variance was from those amounts. After that, we get into a couple of other required statements. They're not a statement, they're basically just informational. Those are on 97, 98, and they show historical numbers for your pension plan, proportionate share of the pension liability. On page 97, I won't go into this in detail, but just to give you an idea, it is quite comprehensive actually. So like on page 97, the very top line, district's proportional share of net pension liability assets. So it's basically showing what your percentage of the pool, CalPERS, what your percentage is of the big pool, things like that. It's kind of interesting to look and see, but it'll show your funding status, amounts paid out, what your liabilities are, what your liability is compared to your payroll and such. It's useful information over a 10-year period so somebody can see what the trend is. For a lot of clients, it's up and down for the very reason we talked previously, you know, changes in stock market and things like that. So it can be kind of a roller coaster, but it is usable information.
So can I ask a quick question? Under the general fund, that doesn't, the business part, the water is not included in these statements, correct? That's why it's not?
No, they are.
Well, you've got parks,
Oh, okay, let me back up. Okay, so let me just take a step back. Everything is included, so there are various portions of the financial statement. There's going to be many statements that make up the whole document. The first two pages show aggregated, both governmental and for-profit. And let me see if I can find it real quick. I'm looking for the statement in that position is what I'm looking for. So if anybody sees it, yell out the number. I kind of jumbled some things here. Okay, I'm going to go to my...
you just have all of,
55,
everything
yeah.
listed except the
55?
business part, because it's not under the general, right? That's,
It's not a governmental entity. I mean, it's not the governmental fund, it's the enterprise fund.
right, and so that's why I say, so general fund is not the business fund.
Yes.
So that's why it's not in here. It's just
Well, I want to make sure I
it's just
clarify
interesting
because-
that it's not, because.
Well, no, let me just, maybe
It's
we're
the
saying the
biggest
same
part of
thing,
the-
but let me go ahead and throw it out here again. So the whole financial statement document itself is going to show the first couple of pages, a statement of net assets, or net position, I'm sorry, I'm living in the past. Statement of net position is going to show the governmental portion, and there's a column for that. It's going to show your assets and liabilities, and it's got the business assets, and then a total. So everything is combined there. The next page is the statement of activities. And there again, the P&L side of things, it shows the governmental activities and the business type activities. These are considered government-wide financial statements. It has everything together. Everything that follows behind it, The fund financial statements deal only with the governmental side of it. The pages where we saw general, street lighting, parks and rec, that just deals with the governmental funds themselves and their reconciliations. They're showed separately. There's a couple of pages of those. And then we have separate 2 pages, actually it's 4 pages, 4 pages that deal with the business type activities. They are done on the full accrual basis, and you will see assets, liabilities on one page, the P&L on the next, and then the cash flow statements.
Okay.
So these statements, the first 2 pages in the government-wide do reflect the activities of governmental and enterprise. It's got everything in there. Everything's properly allocated to whether they're governmental or whether they're business. So,
I just find the structure of this interesting, that you go through it and then the enterprise or the business part is in there, and then you go through all the clarifications, about 30 pages of, you know, item 2, item 3, item 4, cash flow and all that, and then you have the governmental, the 4 different
The split out of it, yeah.
split,
Yeah.
separated from it. It was kind of weird to me to have it separated like that.
Yeah.
That's all.
Yeah, page 53.
Well, because we went through with the enterprise, and it was all broken out, and, you know, we have 6 million restricted, 3 million not restricted, and then there was 30 pages of writing, basically, of describing everything, and then you go to the governmental part, and it's,
Yeah,
I
'cause-
just thought the structure kind of odd.
And actually, if we had more than one enterprise besides water, that would be divided into 2 different sections as well.
That would be separated also.
yeah.
But because we only have one,
Yeah.
it's all together.
Okay, well,
It's all,
I just found that interesting.
it's all a function of governmental funds being on modified accrual basis, one type of accounting, and
Oh, I see,
enterprises
I
being on the
see.
full accrual. You
Oh,
can't
okay.
combine them without those reconciliations,
Ah.
which is, yeah, it's not my
Got it.
favorite.
Got it. Okay.
All right.
Accounting.
Yeah.
There's no accounting for
Yeah.
accounting.
Yeah, right.
Wait till AI gets a hold of this whole thing. That will be interesting. I'm interested to see what happens. Okay, the last section is the statistical section. This is prepared by the district. We help out, but it's basically information that comes from the financials. And it deals with several items. It basically, everything from showing the operations, the net position by the components over a 10-year period. The whole idea of the statistical section is to show trends. Certain information that the district feels is usable, is important to the reader, to other entities as well. Items that really provide the kind of the nuts and bolts of the operations. There again, the financials. Then it gets into things like, you know, what may be the most, the largest employers in the area, or who's using the most water, or who's doing this and who's doing that. What your rate structure is as well.
These are a lot of the same things as we have in our budget, in the statistical section of our budget.
A lot of the
There's-
similar graphs. you know.
There's one item with regard to, let me find it. I'm looking for the debt coverage page. Page 116. Okay, so Jeff Palmer's the supervisor on engagement. He's fantastic. And so I reviewed this and I saw an inconsistency, and I asked him about it, and we came to the conclusion that there's a couple of choices here. If you'll see from 2022 and 2023, there's kind of this big change. At the very bottom, I'm looking at the number at the very bottom there.
Debt surface coverage,
Yeah, it says.
very small.
4.37, and the next one is 0.9. And my question to him was, okay, what's in that in 2023's. And what's in it is some non-cash items. And non-cash items essentially being pension expense. It's a non-cash, it's just an adjustment to your liability. So what we determined is that probably the better way to go, I shouldn't say better, a way to go, is to recalculate 2023. It would improve your ratio. However, I think the same treatment might have, I won't say, adverse effects is not the right term. It's not bad, but it will change some of the numbers for the previous years if we use the same methodology. I wanted to throw that out to you. It's not something that we have to decide right now, but it's something that needs to be thought out, maybe some
A
calculations made.
smoothing effect?
There you go. I like that. Yeah. It might bring down 2022's number a bit. I don't know what it would be. It might bring down 2023's number, 2021's number a bit. But it would definitely bring 2023 up, and I think just my back of the napkin type thing, I think it brought it up to 1.6. And I don't recall
So
what
would that be like using an average, a running average versus up
No.
and down and up and down?
Actually, the way it's pretty specific. Actually, the way this is calculated is, I want to use the right term, your net revenues for debt service is what we're looking for. And net revenues is essentially your revenues less your expenses minus non-cash expenses or certain unusual items. And I'll give you an example. If you receive a insurance settlement, it really doesn't belong in there. It's not a typical type of revenue. Let's just say, yeah, we'll use that as a revenue as opposed to losing money. You wouldn't count that in. So you would be looking at your traditional revenues minus your traditional
Because
expenses.
it's a one-time event.
And you make sure that you back out your depreciation expense, because that's a non-cash item. You've already spent the money. It doesn't affect your current cash flow. The other item potentially is the pension liability adjustment, the expense that's related to that. And that can work both ways. If the stock market goes up, going back to that one example, stock market goes up, bunch of revenue, you wouldn't want to include that. If the market goes down, it's an expense. You don't really want to use that as well. It's a non-cash item. So I think before this goes to absolute final, I think there needs to be just a little bit of, take a look at it and decide which way you want to go with it. But we need to be consistent. We can't do it one way one year, one way the next. So
Right.
this isn't a huge problem, but it's something that popped up kind of the last second.
Well, the effect of the change from 4 to 0.9 relates to borrowing, correct?
Yeah, if
But we're not going to be borrowing anything, are we?
Not that we have
Because
planned.
we just borrowed
Right,
6.
right. But I feel like it should be reflective of what would be pertinent to somebody who was considering that. But we also have minimum liabilities that or minimum debt ratios that we have to meet for our covenants, our loan covenants.
Which is?
Like 1.2 or something like that.
Yeah, 1.2, 1.3 maybe in one of them.
So that should be adjusted somehow.
Yeah, it needs to be really more, it needs to be reflective of what is pertinent to debt service considerations.
So the adjustment brought it to 1.5, 1.6?
About 1.6, yeah. If we back out the non-cash items. So, and there again, that was kind of on the back of a napkin. It wasn't. But I did it and Jeff did it independently. We kind of threw numbers at each other, and we're both pretty close.
Well, and it
David,
should
did
probably
you get a chance to look at that?
He discussed it with me, but I didn't.
Okay, I didn't think you'd had a chance to calculate it yet.
Well, and we have a debt service ratio calculator that is provided by, like, the iBank that we
Okay.
have to.
So that's the
complete.
true
Right,
number there.
so it should probably be closer to that, I would think.
Yeah.
What that looks like.
Yeah. There again, in a perfect world, of course, this is an aggregated table. You might have many different loans with different requirements and such.
Because expenses like the pension adjustments are actually being offset by interest that we're getting in investments. I mean, those things aren't they kind of offset in that way?
No, interest on your-
Because the pension lost money because of rising interest rates, basically, but the district is making more money because of rising interest rates. No, it doesn't work that way? In the accounting?
The pension is calculated based on 2 years ago. So when interest rates were all down, the interest earned is based on current year. So they're different years you're reflecting.
There are different years, okay.
That's- yeah.
and one is a real
I
asset.
assume that the loss was last year, but the pension loss is 2 years ago. Whoa, wow. It's
And one
gonna
is
be
a real
worse this year
asset.
then.
Yeah, it's gonna be ugly.
No, like I was saying, they earned close to their target. It was 2 years ago.
2023?
2 years ago when they lost 9%, I think it was, or whatever.
What is their target, 5 or 6?
You're probably thinking of
8%.
the announcement that they had several months ago about that, and that was regarding the 2-year, the results from 2 years ago.
The last time this happened, we had just entered CalPERS and we didn't get affected because they had a huge rate increase.
Yeah.
This one we're in.
Yeah.
Okay, so that's not a comparison. All right. Anyways, so yeah, if we have to keep a
I feel like it
minimum.
needs to be more pertinent to what a potential lender would want to, the information that a potential lender would need to see.
I agree with you. I think, the most current number, it'd be ideal for it to be spot on. So what effect it might have in the prior years is kind of water under the bridge at this
Right.
point. Okay. All right, so either I or Jeff will reach out to you and we'll come out, determine how we're going to deal with that. So,
Are you okay with that?
okay.
Is the committee okay with that?
Yeah, because that's such a dramatic change that it actually
It's
looks
alarming.
fishy to me.
Yes,
So,
that's alarming.
Yeah, it jumped out at me. So then I was like, okay, wait a minute, what's going on? So, kind of the big picture is the audit went well. There's some new items, of course, as we went over with the GASB. They didn't affect you, your investment, loan, not major stuff, just normal operating. We were able to provide you with a unmodified opinion. I took you through a whole bunch of numbers here. You had some good questions there. And I will hand it back to you. That's essentially my report.
well, thank you. We appreciate your time and your effort and look forward to the final draft
That'll be November 8th, at the November 8th meeting.
at the board meeting or the presented here at the committee meet level.
No, it goes to the board.
It goes
next.
to the board now, yeah, with the change.
Any changes that were determined here would be reflected in that document.
Right, okay. Very good, thank you.
Thank you very much.
Appreciate it.
All right.
Okay. Okay, let me get my stack straight here. Okay, so now we are back to the agenda list. We finished item number 4. Item number 5 is review of quarterly financials.
Just a note, I did include the cash disbursements just because, well, normally they would just be reviewed by the board, but because of our special meeting, you'll have an opportunity to look at them before the board meeting, which is tomorrow, but normally they wouldn't be on the agenda.
Yeah, and I didn't really have any questions about it, did you? If you don't have any further comments, staff doesn't, then we will move to item 6, which is review of solar project credits and expenses. And that is on page
168.
168.
Did you want to go through any of the other financial documents, or are you okay with those?
Pardon me?
Did you want to look at it and talk about any of the other financial documents, or are you okay with
Are they
those?
under the quarterly financials?
Yes.
You know, I didn't have any other questions, did you?
Okay.
No?
The first quarter is always a little, because, starts smoothing out a little bit more.
Yeah, I mean,
By
it's,
mid-year, yeah.
it's the first quarter and things go up and down and,
Yeah, there was nothing alarming in there.
no, I didn't see anything. So what page now is it?
168 is the solar. Yeah, cut off part of the page.
168. Okay,
Looks like I cut off part of the page here, but we've only received 61,805 right now. Normally I have a total at the bottom for the year to date, but that's not there. But since
Oh,
it's
I
only one
see,
quarter, we're
I
good. Yeah, and on page 169 at the net cash flow at the bottom of 521, it says $521,003.
uh-huh.
That is what would have been there too, what the cost to date less the credits received to date
So we actually have a positive cash flow for solar?
for the moment. Yes, we actually have.
Put that in the record, please.
I
for-
know, right? Last year we had, the last couple of years we've had some decent,
It's all over the place.
Yeah, yeah. You know, as long as it at least stays even.
I know, right? Mhm. It's very
It was a
unpredictable.
big investment,
Yes,
we had to borrow, but as long as it's neutral, then it's not hurting the district at least.
exactly. That's, and right now we're in good shape.
And so it's been, what, 10 years? Let's see,
We are in year 9, I think.
9.
I know, right? Let's see here.
2015, 16 is the first year, so, yeah, 9 years, basically. So we still have at least 15 years of operation, hopefully.
Yep, till 2045.
Somebody else will be worrying about that.
Yeah, for sure.
Did you have any questions or comments on it? Okay, so at least it's temporarily in the black.
Yes.
Thank
Hopefully
you.
it'll stay that way, yeah.
Review of quarterly investment report, is that page 170?
Yes, it is, and I'm going to ask David to address this with you.
Okay,
Questions?
Well, just if you had any questions on it.
yeah, I think there were two things that, yeah, take care. There were two things that this graph or the chart needs is, it's like I said, I didn't know which ones were enterprise and which ones were government.
All the funds are combined.
They're pooled, yes.
They're pooled for cash purposes. Everything's just pulled together.
Okay, so you just take percentages out, is that what you do?
To allocate it to the specific fund, yes, based on however much.
So it's
They
a
have.
percentage, and that's, you take the revenue and,
Yes.
okay. And then the other thing would be, it has a maturity, but not a maturity date, right?
They do have maturity dates listed
Where is that?
to the right of the interest rate.
I see, 2020, 2026, okay. So it does have the maturity date.
We've got a couple coming up next month, 3 coming up next month. Or no, 2 coming up next month.
Two are coming up. And none of these are restricted as far as the interest that can be earned. I know the money that was borrowed can't can't earn more than the,
Correct.
Correct.
Any excess is going to need to be returned back. The excess of the 4.65, well, whatever the loan was given at, yes,
okay,
related to the $6 million loan.
yeah, okay. So we have it pretty well laddered out, and because I think interest rates may go up a little bit more here.
They
At
cr-
least the 10-year is
They called up a
continuing to
little bit a
rise.
few weeks ago at the last meeting, and then this next meeting, yeah. So, yeah, they have been climbing up in the long term, but we stay under the 5 years. This current one that's going to mature on 11/9 is only at 4.5, so that one I should be able to get up a little bit. So overall, all the monies combined is at 4.9 right now.
So the reason I don't know why I didn't see the maturity date, but is there if you go to a longer term, it only means that if it's taken out, there might be a little penalty
Correct.
before that? I
Correct.
mean, but you're going to, if it's not needed, you'd get, as the long-term end of the curve is rising, I think it would be just something to watch, because, you have 1 years, 2 years, 3 years, but if everything is converted to, let's just say, and I don't know, I can't predict it, but say 5-year, then you're extending out the returns for an extended period of time. So, and I understand doing it at a 1 year, 2 year,
There's certain
but
amounts of
eventually,
money.
if you start putting those extending them out, because the only reason I say this, I remember when my dad in the mid-'80s, he had money at 20%.
Wow.
Because interest rates were at 20%. But those all matured eventually, and about 10 or 20 years later, their income went because it was down to like 4. So I just remember that, and it was,
When we're calculating or determining investment options for the district, there's a few things that we look at. We look at our projected cash flows. We look at, for example, the schedule for the Civic Center, when we're going to need that money.
mhm.
And
Well, yeah, the 6 million and
yeah, so
plus whatever else
So we
is,
ladder out
Yeah.
based on those needs.
yes,
And on the same, as you just mentioned, if we invest in 5 years, and then what if all of a sudden all the shorter term ones are exceeding those levels, so it's kind of a little balancing act that David has to look at and he presents to Don.
it is, that's why
And
I
there's a
just
determination
suggested
made,
just
yeah.
looking at, because it looks like interest rates are going to be going up, but
Yeah.
eventually it's going to crush the economy, and then they're going to have to start reversing, so that's what you
Definitely.
have to start looking
I
at.
do consider those long-term things, and over the past year or two when we've been doing this, the shorter-term stuff has been higher.
Yes, it's
And now that
inverted for now, but
Yes.
it's not going to be
Now
for
those other
long.
ones are coming up to where it's comparative.
Yeah,
Yeah, I do like to do a longer term to secure those because
Right.
of the volatility of it.
Right.
Yes, I do like the longer range stuff, but we are limited on how far we can go out.
yeah, no, I didn't say anything beyond probably 5 years,
Yeah.
but if everything that we have, eventually, if it can be in that area, you're guaranteeing, you're locking that interest rate in for 5 years, which
Yes.
is,
Yeah, great.
It has been great.
because that's income for an extended period of time out. Anyways,
Our investment program has been very successful. We've done really well with it.
yeah. Yeah, it went from 200,000 to 1.5 million,
Yeah.
so.
Yeah, that's a big jump.
Okay, that's because that was the split, that we talked about earlier, that it wasn't on here, and I just, now you explained how you're dividing the funds out. which we needed to do. Okay, thank you. Did you have any other?
I didn't know, you covered it all.
Sorry.
No, great, that's great.
Okay, anything else on item 7? No?
I wonder if we should consider bringing a pooled cash report to you at the next meeting, just so you can kind of see, we have the pooled cash, which is the investments and such, where our money's at. And then there's an area called the claim on cash, which means, okay, water has, this much of the money is water, this much of the money is parks, this much of the money is, all the different things. And that might be helpful to what you're,
Well, it wasn't broken out.
yeah, it's,
And but then I realized, you pointed out that it is broken out. And David said, well, it's done by percent. It's not
Right.
really broken out, but it's done by the percent of investment, so.
Yes.
Okay, I understand it, so that's fine. It just wasn't explained, and now maybe we should explain it to the board at some time. I don't know whether any other board member is interested in it or not, but the financial committee has to be interested in it. We just have to be legal, that's all. We have to make sure that we split those out.
Next time
Which you
you're-
know.
Next time you're in the office, pop in and I will show you the pooled financial report and see if that's what you have in mind.
That might be 3 months from now, so.
That's okay. Either one of you, both of you.
Okay. I guess that's it for that. Item 8, committee comments. Any additional comments?
No comments from me.
I just say everything looks good.
Another successful audit, that's
Yeah,
awesome.
yeah. Review of action items. Prior meeting, did we have any?
No.
And current meeting, do we have any?
None unless you want to see a pooled cash report.
I'm sorry, what?
The pooled cash.
Do you want to see the pooled cash report?
What benefit would that be?
That's why I wanted to show it to you and see if it's something you think you maybe would like to see.
If it does any more explanation than what we have, it's fine. I just didn't know how the monies were being,
That kind of shows it a little bit, but yeah, if you pop in my office like I said,
yeah,
I'll show
yeah,
it
so
to
we
you.
don't need to
Or I
bring
can
it,
even email it to you and you can take a look at it and we can
we
talk
don't,
about it.
okay, we don't need to bring it to the committee level, okay.
At least not yet,
Yeah,
yeah. See
yeah.
if it's something you're interested in.
Okay.
More paperwork, right?
Yeah. Setting agenda for next meeting, we would have removal of item 4, correct? That's it? Just number 4? Okay. So we will remove item 4.
And actually, we'll probably be starting to talk about the
Budget?
the budget schedule.
So we might add that budget schedule to the next meeting?
Yeah, because that's going to be in January, right? So we'll want the budget schedule on there for the
Okay,
committee to look at before we take it to
you
the
can
board.
replace item 4 with
budget schedule.
budget schedule.
We were talking about that the other day, you go right from the audit into the budget. and then
I know,
the
it's-
Budget into the audit.
We start in November, December, so. Okay, so we have those changes. Anything else? So our next meeting will be January 16th, 2024.
Wow.
With that, item 11, we will adjourn at 5:13. Thank you. Which one is right? 5?